Hi everyone, I want to run through some of the stocks which have not really recovered back to their pre-pandemic levels. Okay, and you can understand why some of them haven't in the case of Rolls-Royce. And what do we do now? Okay, it's rebounded from say 50 up to 100. What might happen? Now this is not part of my great investments program. It's not the cash flow, revenue growth, the standard ones, but I wanted to show some of these out of interest for people who might be looking. So that's sitting at 100. Would it be reasonable to say that on the whole, that is well below its longer term average? Of course, the pandemic is not normal, and therefore 200 seems a reasonable target for Rolls-Royce to hit at some point within the next 2 years. You might get 100% return, but it might take you 3 years. Would that be something that you'd be willing to do? I think that that is a probable trade. That could happen. Now you might say, well, I don't want my 100% return in 2 years. I want it tomorrow. Well, it's up to you, but that's the price you pay. Let's look at some others. International consolidated airlines, obviously British Airways and the like, Iberia. So what are you sitting at? You've doubled your money. You got 100% return in the short term. We're now sitting at 200. It's pretty much in the middle of the range, okay, for this. And you might say, well, as things lighten down, if we can already get to 200 and it's pricing in the future, can we get that up to a 300? Lower probability, that's a 50% return. Either 2 years will run out or you'll get 50%. Whichever happens first, you'd look to get out. Okay, Provident Financial, I've not looked into the reasons why this has fallen off a cliff, so I'm not going to look to commentate on it. Because it doesn't seem COVID related, so why the heck it's come off? It's come off for a long time, so I'm not going to commentate on it. This we know why. Again, it's gone up its 100% since lockdown releases, and there's a delay, and we know it's been a healthy company up till then. So can we at least say from 100 to 200 and give it, say, 2 years to give us 100% return? Seems reasonable. Again, not part of my regular great investments program companies where we're looking at cash flow, revenue growth, and the like. Beasley. Okay, it's stayed since COVID at its low levels. It's not had that bounce back. It's not recovered. It just seems to have flatlined and consolidated. So would you be willing on that to say, well, look, it had been solid for years up till then, and now in the next couple of years, well, can we get back to all-time highs? That seems a big ask. What if I extended that to 3 years? Would you be willing to do that trade? 3 years, it goes back to where it was back pre-COVID and even before that, and you give it 3-year window for management to turn it around. Okay, seems relatively reasonable. This looks a bit messy. Don't really want to go into that one. ICAP, I don't want to go into that one. Rank, nothing very exciting about that, I don't think. Hiscox, insurer. Again, you can see why some of that might be COVID related, and it's not really still recovered. They're probably anticipating more claims coming through, but there's other issues relating to the company in itself. But again, strong, solid company for years. All of a sudden, pre-COVID started coming off, then COVID hits, then it comes off. Now it's gone back to 800. Can we get that back to 1600? Well, if it does, what kind of time frame would you be willing to wait to get 100% return? 3 years? Yeah, possibly. Now, you might say, well, wait a minute, you've not actually looked at the financials. Like I said, these don't have good financials from the traditional methods that I'd pick, which are valuation, growth, income, cash flow, and the like. So if that's the case, then we really are doing it based on, as I said, that strategy of time frame and what kind of returns in that period. So that's quite a few I've given. This has been on a downward trend. Why would I want to take a view? Doesn't seem to fit the other strategy that I've given up till now. Similarly with First Group, you know, it's been pretty much going nowhere anyway, and it's back to where it was. So where's the excitement in something like that? Anyway, that's just a few of them. I just want to give an insight into an alternative way of looking at these. Again, problem with Micro Focus is, listen, it had, before all of this, yes, it had been doing well, then it had fallen off, then had dropped off again, and even before COVID, it had dropped off. So given that it seemed to be on a bit of a decline pre-COVID, and now it's really fallen off, I'm not really impressed by the fact that it's doubled since hitting the bottom, and I don't really want to risk that. Yes, it could get back up to those levels, could it? Because its problem started long before then. So That's what worries me with that one. Anyway, just wanted to give an example on some of the companies and a different perspective.